Well, hello and welcome to this Money Control live stream. You're watching Morning Trade. It's a brand new week and the cues coming in this morning are largely positive. Well, US lawmakers have struck a last-minute deal to avert after a month of high-stakes talks. President Joe Biden says the compromise to raise the debt limit for 2 years will prevent a catastrophic default. House Speaker Kevin McCarthy believes deal is good for the US economy. Stocks surge on Wall Street on Friday as the Nasdaq gains for the fifth straight week. Asian markets rally on an agreement to raise the debt ceiling in the US. The SGX Nifty hints at a higher start for the Indian market. Oil, meanwhile, trades above that $77 a barrel mark. ONGC reports a Q4 loss led by a one-time hit to provide for tax disputes. BHEL 2 posts an operationally weak quarter. ICICI Bank will raise stake in listed arm ICICI Lombard to over 50% before September, reversing its plan to pare its holding in the insurer. Prime Minister Narendra Modi inaugurates the new parliament building amid a large-scale boycott by opposition parties. PM hails the rise of a self-reliant India, calls the new parliament a temple of democracy. Well, before we talk about the global developments, let me bring on board Nilesh Jain of Centrum Broking and discuss the market setup this morning. Good morning, Nilesh. Good to have you on the show. Well, we saw a strong rally come in on Friday. In fact, knocking at that 18,500 mark. But if the Nifty does break out of that 18,550 range or thereabouts, do you expect 18,700 to 18,800 levels this week itself?
Very good morning to you, Nandita. Absolutely. If you look at the overall structure, as we have already witnessed a height of an habit of formation, and on the top of it, we have seen all the moving average, be it short-term or long-term, has already been surpassed. The immediate support of 21 DMA, that is coming near about 18,250 mark. So overall, the structure has been on a positive side. We have seen a lot of buying from the FIIs. The long-short ratio, which was a couple of months back was at 8%. It has now reached 62%. We have also witnessed a spike from 58% to 62% on Friday itself. And even if you look at the put call ratio, which has started moving higher, on the contrary, the volatility index, which is constantly on a declining front. So declining in the volatility is certainly a positive sign for the bulls, and it has slipped below 12 level. So overall, the structure is very much on the positive side. For the Nifty index, it's a matter of time that it hits a fresh all-time high mark. Nifty midcap index, in fact, on Friday, hit a fresh all-time high mark. Bank Nifty, in fact, is trading almost close to its previous all-time high mark. So overall, the sentiments and the undertone continues to remain on a positive side. On immediate basis, the target for the Nifty comes around 18,700, and then probably in the June series itself, we are likely to see a fresh all-time high for the Nifty index. For the Bank Nifty, the targets on the high side comes around 44,500. The support has shifted higher towards 13,600. So overall, we are advising buy on decline sort of structure as we have witnessed already. So stick to the stock specific action. The overall sentiment is on a positive side.
Right, the overall sentiment is on the positive side. Hold that thought, Nilesh. We'll come back to you, but let me also go across to my global guest this morning to discuss the last-minute deal that has been struck between the Republicans and the Democrats. Well, we're joined by Seth Freeman, who's the MD at B. Riley Advisory Services, live from San Francisco. Hi, Seth. Thanks a lot for joining in. Well, first of all, what are your thoughts on the deal that has been reached? It still has to pass muster at the Congress. Do you expect any more changes going forward before the, bill gets taken up in the House?
I think it's highly likely there will be some last-minute deals made. There's a lot of details. I understand there's about a 90-page report that was released that everyone is analyzing now. One of the key issues is not one of the main issues are some social programs that President Biden wanted to retain that Republicans, especially the conservatives, don't feel is enough in terms of constraining increases. We're seeing tremendous pressure on the healthcare sector here in the U.S., where Medicare and state healthcare programs have not had increases in reimbursements to hospitals. And we're seeing quite a few. In fact, my firm is helping one hospital that just filed for Chapter 9, which is the equivalent of Chapter 11. because the reimbursement rates have not been increased for many years.
Right. I want to ask you, do you expect the bulls to go berserk now that, a default would certainly be averted by the US government? Of course, the US markets will remain shut tonight given the fact that it's Memorial Day, but tomorrow when the markets open, do you expect, sort of a euphoric rally to play out? And given the fact that the S&P 500 is already up 8% this year and the NASDAQ has also recouped half of its bear market losses?
Yes, I think, there's nothing the market likes better, global markets, than some certainty. And this takes away all of the noise we've been hearing about a potential default. And so that should create some ebullience, perhaps, until we see the details and how it affects different industries. I know there's concern by Democrats that some of the carried interest benefits that private equity investors and private equity fund managers have retained is a concern. So I think we're going to see some volatility as well. We're also getting into the beginning of the summer season, which means that volumes generally drop, so that we could see more volatility because of that.
Right. Seth, do you expect this euphoria to be short-lived given the fact that, if the deal passes through, JP Morgan estimates that $1 trillion worth of new treasury bills will flood the markets, which in turn will suck out excess liquidity from the system. In fact, that would make borrowing by corporates even more difficult. So how do you expect the situation to pan out once the deal is, has been passed through?
Well, I think we have to look at the markets, but we have to look at company level problems. We have a tremendous amount of term loans and other debt that is going to be renewed at significantly higher interest rates. And this is a global problem, not just the United States, over the next few months and throughout the rest of the year and going into next year. So we're going to see businesses that did okay at 3 to 4% interest rates now be facing 8 and 10% interest rates, and that's going to put a lot of pressure on companies. We are seeing a lot of large and medium-sized companies announcing layoffs. So none of this is good for the system, you could say.
Right. Lastly, of course, we are awaiting the US jobs data for the month of May. And, there is a widespread division within the US Federal Reserve to pause or to hike rates in the June policy. But if the job data remains hot, do you expect another 25 basis point rate hike to come in June?
If the job reports still appear to be high, it's possible the Fed is still committed to being aggressive in dealing with inflation. It's totally problematic, this idea of actually increasing unemployment in order to bring down inflation. We still have a relatively high level of employment in the United States, in spite of large announcements of layoffs. We're seeing big changes in terms of the services economy is doing well. People want experiences and services, and retail is, quite frankly, crashing at this time.
Right. Those are the thoughts coming in from Seth. Seth, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us. Well, let's go back to Nilesh then and talk about the stock of the day, which is Maruti. Now, the company has warned that, it expects production loss in Q1 on the back of, some shortage when it comes to semiconductor chips. Production was already hurt in April, and the month of May and June will not be any different for the company. In fact, order backlog for Ertiga and Brezza has been growing. Even Jimny and Fronx have orders in excess of 30,000 units, and the company is finding it difficult to match up to this demand. Nilesh, given the fact that earnings in the fourth quarter were pretty good, the stock has been in an uptrend. Do you expect this to slam the brakes on the kind of up move that we have been witnessing on the stock?
Well, Nandita, the chart is saying something else. We have seen a strong up move in last couple of trading sessions. We might see some knee-jerk impact on the basis of this particular news, but the major structure continues to remain on a positive side. If you talk about the target on the higher side, that comes around near about 9,600 to 9,800. And any decline towards 9,200 to 9,000 could be a good opportunity to make a fresh entry. The major support for the Maruti counter is now placed at 8,800. So as long as it trades above 8,800, the outlook continues to remain on a positive side.
Right, we have a couple of queries coming in. Before I take it up, I want to remind our viewers, if you have queries, send them in to us on our live feed on YouTube and we'll have them addressed by Nilesh. So the first query that I want to take up is TVS Motor. It comes in from Saujanya R. And, when you look at the charts, TVS Motor had hit a fresh record on Friday. Numbers were extremely good. Good going for the stock as well. More upside, and what should one do with the stock now?
Well, Nandita, we have been bullish on the Nifty Auto Index as a whole. And if you talk about specifically TVS Motor, this particular counter has no doubt outperformed and the structure continues to remain on a positive side. The upside target is still intact of near about 1350 to 1400. If already somebody is holding the long position, then keep a trailing stop loss below 1250. And on the upside, the target can be revised if it surpasses 1350 towards 1400. So structure looks positive.
Right, the structure for TVS remains positive. Let's take stock of the brokerage of the day. There are certain brokerages that are bullish on Sun Pharma after its good show on Friday. In fact, specialty business is something that has driven earnings for this pharma giant. So Jefferies has a buy rating, but target has been cut to 1150 from 1200 rupees a share. It believes that FY24 revenue growth guidance has been on expected lines. It has cut its FY24, FY25 EPS estimates on the stock by 2 to 3% to model the Concert acquisition that the company had made. In fact, it still sees Sun Pharma as the best long-term story in the pharma space. Nomura as well has a buy rating, the target price of 1132 per share. Specialty business will remain the growth driver for the company going forward. In fact, it also expects Illumia to add $80 to $100 million in sales for the company in the current fiscal. In fact, it has also cut earnings estimate for FY24, FY25 by 6 to 4% due to regulatory actions in the US. We also have a query coming in on Sun Pharma from Mark Hughes. He wants to know your thoughts on this counter. Do you expect this, good earnings to rub off on the stock, and now maybe is the time to look at buying into this or wait for dips?
If you look at the overall structure, which has been on a positive side, although we saw some consolidation in between in last couple of months. On the higher side, the stock hit in the month of January to the levels of 1050, and from those levels we have seen a good amount of correction. And due to this correction, the risk and reward is again turned favorable. It has now reached to its crucial support zone of 915. That is the level where it has formed a strong base formation as well as a double bottom formation. So from here, we expect a strong pullback. That pullback may continue towards 1000, 1050 once again. So the risk and reward looks favorable. Keep a stop loss below 920. Fresh longs can be added on declines. Existing longs can be hold. The momentum indicators and oscillators have also turned on a positive side. So structure-wise, it is looking on a positive side.
Well, the structure for Sun Pharma on the charts is on the positive side. I also want to get your thoughts on ICICI Lombard. There is news flow that ICICI Bank will be increasing its stake, to beyond 50%. It was earlier looking to cut stake, but now it will be increasing stake by somewhere around 4% or thereabouts. What's your call on ICICI Lombard, given the fact that on a year-to-date basis, it has, lost somewhere around 10 to 11% or thereabouts. But, over the last 5 days, it has managed to gain 2% or thereabouts. How are the chart setups looking? How is the chart setup looking for this one now?
Well, in last 6 to 7 months, if you look at the stock has in a downtrend and constantly forming a lower top and lower bottom formation. It has hit the highs of 1650 in the month of September, and since then we have seen a gradual correction. So at current level, there could be possibility of a pullback. That pullback may extend towards 1100 to 1150 to 1200. But I think this pullback should be used as a selling opportunity because the structure is not that convincing. If somebody is already holding the long position, keep a stop loss below 1050 and play for this pullback, which may continue towards 1150 to 1200.
Right, that's the call on ICICI Lombard. Let's take up a query on Reliance Industries. The stock was up 3% in Friday's session. Do you think this stock to emerge as a big contributor, if the Nifty really hits record high anytime soon?
Absolutely. In fact, this particular stock was on my radar as well. And this structure is no doubt looking very promising at current level, given the fact that it has given a good amount of correction from the levels of 2750, still available at a corrected level, given in spite of the recovery that we saw in the Nifty index from the lower levels. The stock did not participate that much. So I think it's time for Reliance now. The upside is very much open for 2600 to 2700 on immediate basis. Keep a stop loss below 2450 for the long position.
Right, that's the stop loss level to watch out for. Let's take up a query on NHPC. This one is coming in from Mohit Anand Bhatia, and he wants to know whether it's a good buy at the current price. In the last 6 months, the stock hasn't really done much, but over the if you look at the YTD charts, it has gained somewhere around 8% or thereabouts. Should one looking at buying at current levels now, NHPC?
Yeah, it can be bought given the rally that we saw in this particular counter. It is constantly forming a height up and bottom formation, but it is a slightly slow mover counter, so the time horizon should be more than it might be attractive, but I would rather wait for a breakout above 45. Then we might get a confirmation for the upside target of 50 to 52. And the support at current level is now placed at 39. So any decline could be a good opportunity, or either I would wait for a breakout above 45.
Right, that's the call on NHPC. Let's take up a query on JK Cement next. Prasanna has written in and wants to know your thoughts on this counter. It staged a very smart rebound, in fact, in the last hour of trade on Friday, and it's moving towards its 52-week highs of 3,200 or thereabouts. Should one look at nibbling into this one at the current juncture?
The structure is not that much promising. The volume is slightly on a lower side. And if we talk about the cement space, the outlook, no doubt, we have on a positive side. But as far as JK Cement is concerned, it is looking slightly on a consolidation mode. The upside may extend towards 3,100 to 3,200. The stop loss for the long position should be placed near about 2,900. But if somebody wants to, stay put in within this particular space, I would rather go with Ultratech Cement, where the structure is slightly on a promising side. The upside is open for 8,000 to 8,100, and this particular counter can be bought on declines, keeping stop loss below 7,400.
Right, keeping a stop loss before 3,400. Well, that's the call. Let's also take up a query on LNT Technology. Vivek Kurup has written in and he wants to know whether he should look at buying this stock now. What would you advise him to do, Nilesh?
In overall Nifty IT space, if you look at, we are currently witnessing a gradual up move from the lower levels. Specifically, midcap and small cap ITs are looking positive. If you talk about LTTS, it is currently trading near about 3880 levels. The pullback may extend towards 4,200 to 4,400. But within this space, I would be rather comfortable going with the Coforge or maybe counters like SCL Tech and Infosys. So these are the couple of counters from the IT pack which are looking on a positive side. LTTS, if somebody is already holding, then keep a stop loss below 3,700 and stay put.
Right, stay put. That's the call, on LNT Tech. Let me take up another query on Balkrishna Industries. This one is coming in from Satya CK, and he wants to know your thoughts on the charts. This stock is up literally 13% over the last 5 sessions. More upside going forward now?
Overall, all the tire stocks have witnessed a strong up move in the May series so far, and Balkrishna Industries as well has given a fresh breakout on the chart. But as you rightly mentioned, given the fact it has already given a sharp run up in last week near about 15%, the risk and reward is not that much favorable. But if somebody is already holding the long position, then I would rather stay. I would advise to stay put, keeping stop loss below 2,400. The upside is open for 2,600 to 2,650.
Right. 2 queries, before I end the show. One is coming in from Akshay on ITC. He has been holding 100 shares at the rate of 430. Now, brokerages are bullish on this counter, expect the stock to hit 500 sometime soon. But what are your own thoughts? What are the charts saying?
Well, chart is also on a positive side. Overall, ITC has been one of the outperformer from the FMCG basket, constantly forming a high top and habit of formation. This particular momentum is looking very strong. It may continue towards 470 to 480 sort of levels on immediate basis. But at current level, the risk and reward is not that much favorable. If somebody is already holding the existing long position, then keep a trailing stop loss so that one should not miss the gains that we have already seen in this particular counter. Keep a trailing stop loss below 430. That's the immediate support on the chart. The upside is open for 470 to 480.
Right, that's the call. Let's take up the last query for today, and this one is coming in from Partho, and he wants to know your thoughts on Balrampur Chini. Off its 52-week lows over the last 1 month, it has lost 6% or thereabouts. What is your view on some of these sugar stocks now? What should one do with them?
Well, it's a commodity play and it's more sort of a news driven. So I'm not that much comfortable. The structure is not that much promising. But if somebody has a horizon of let's say more than 1 year, then I would advise to stay put, keeping a stop loss below 350, and we might see a pullback in this particular counter as well towards 420 to 440.
Right, I think this wraps up our query segment for today. But before I let you go, Nilesh, what are your stock recommendations for viewers this morning?
We have been bullish on the banking space, and the structure for the Bank Nifty is still looking very much positive. We expect an outperformance in the June series from the Bank Nifty as well. So the stocks that are likely to lead this particular rally could be Axis Bank, where we have seen a fresh flag and pull sort of a pattern breakout on the daily time frame chart. So Axis Bank looks positive for the upside target of 945 to 955. One can keep a stop loss below 950, and the structure wise it is looking very much on a positive side. The other stock that we are liking is from FMCG basket is Dabur, where it has given a fresh breakout from a falling wedge sort of pattern. The upside is open for 555 on immediate basis. Keep a stop loss below 535. And from positional point of view as well, we have our buy recommendation in this particular counter, and for the upside target of 600 plus.
Well, Dabur and Axis Bank, two stock recommendations coming in from Nilesh this morning. With that, Nilesh, thanks a lot for taking out time and joining in this morning, and of course also addressing queries from the viewers. Well, with that, we are completely timed out on this edition of Morning Trade, but don't go anywhere because coming up next is Opening Bell. Thanks a lot for watching.